Hello and good morning everybody. You're with Mark Carney, Chief Account Executive and Trading Analyst GDMFX. Welcome to today's European Session Market Outlook. As usual, we're going to start with a short coverage of the North American markets, starting with the Industrial Dow Jones, which added along with the NASDAQ a few pips up, 24 to be exact, and about 70 pips for the NASDAQ. The Dixie Index is down to 94.65 from 94.66 yesterday at the same time. Initial and continuing jobless claims, 35,000 better than expected, 43,000 lower than previous, and 35 better than expected, and 71 lower than previous. Pending home sales, year to year and month on month, 2% higher than previous and 4.3% worse than expected. We also had the 7-year note auction, which came a little bit lower than previous. For today, of course, the big event, the GDP preliminary data for the last quarter for last year. Then we also have the same reading month on month for the Canadian dollar. But moving back, we have the personal consumption expenditures prices quarter on quarter for the last quarter, Chicago Purchasing Managers Index, and Reuters Michigan Consumer Sentiment Index. This is all for today. Yesterday, on the currency trends, we had a severe movement on the dollar versus the Canadian dollar, 90 pips up, versus the Swiss franc, almost 150 pips up, which is almost 800 pips since the fiasco last week. Versus the Japanese yen, 70 pips up. Moving along to the European markets, the German and the French DAX and CAC 40 went up severely yesterday. The German unemployment change was 8,000 instead of 25. The German unemployment rate, 6.5, better than expected, 6.6 last period. The CPI year on year and month on month came a little bit better than expected. EU consumer confidence, lower, 8.5. European business climate and economic sentiment a bit better than the previous. These are all from yesterday. Now the euro rocketed yesterday versus the dollar 40 pips up versus the pound 70 versus the Australian dollar 270 pips movement versus the Canadian dollar 170 pips up versus the Japanese yen 130 and the Swiss franc 160 pips up versus the New Zealand dollar, again 170 pips up. For today, we have the European Union CPI inflation data and unemployment rate, along with the retail sales reports. There is also an indicator for the Swiss currency, the leading indicator, which measures future trends of overall economic activity. It also captures the movements of the GDP growth, quite important for the Swiss franc. Obviously, the euro is picking up strength and it's shadowing all over the charts. We're also expecting to see continuation of this process of the trend in the near term. The meeting of the European financial ministers, where previous and future sanctions against Russia has been discussed yesterday. There was, of course, a discrepancy between the countries on the subject. There's going to be also a vote on the final measures they're going to take, which is on the 16th of February. Moving along to UK markets, the FTSE 100 gained almost 70 points yesterday and closed at 6,785. The CBI Distributive Trade Survey showed 39 points, 9 positive, along with the GFK High level of consumer confidence in economic activity shown already this morning. Later today, the reports for the consumer credit, net lending to individuals, and mortgage approvals, this is for the month of December, is scheduled in the agenda. The markets pretty much reacted negatively to Mark Carney's speech from Wednesday, where he made it clear that the inflation is still slowing. It's slowing down, and we may also see some negative figures for some period in the near term. This prompted investors to push back expectations for an interest hike to 2016 rather than this year. Gilts fell on all maturity types. The sterling lost 0.7% against the dollar and 0.8% against the euro. In numbers, the cable, 65 pips down yesterday, 145 pips range. It's going up today. Versus the yen, 30 pips up yesterday, 130 pips range, down with 100 pips and even further today. The pound versus the Australian dollar, 190 pips up yesterday, 335 pips range, going down today. Versus the loonie, 55 pips up yesterday, 145 pips range. It is going up as we speak. Moving along to the Asian Pacific markets, starting with the Japanese Nikkei 225, which has added some strength, but on the verge of wiping it all out only during the Asian session during the night. Yesterday we had the Japanese unemployment, which has showed some better outlook, namely from 3.5 to 3.4%, along with the job applicants growing number. The CPI readings came pretty much as expected, no major change there, and the industrial outlook came better year on year but worse month on month. As expected, there was a decline in the household spending measurements, and along with the long-awaited positive trend in the vehicle production reports, keeping the levels with negative mark, but an improvement is clearly there. The yen has lost its ground versus the pound, the euro, and the dollar, as we already mentioned, but all reversed during the night trade, and almost all losses were regained back. We also had some Tier 3 events for today from Australia, which came out as expected or quite close to the anticipated numbers. Basically, the biggest move on the Aussie, on the Australian dollar, was versus the euro. Again, over 260 pips. And along with the New Zealand dollar, where the move versus the euro was around 160 pips. Both currencies couldn't overcome the US dollar and the pound on yesterday's trade. No major events in the calendar for those markets by the end of this week. A short coverage on the commodity trends, starting with the S&P 500 index, which gained almost 40 points, now close at 2014. The EA natural gas storage change, basically it showed that the natural gas futures plunged to a 28-month low on Thursday, after data showed that the US natural gas supplies fell less than forecast last week. Which is also underlying concerns over a weak demand. It fell by 94 billion British terminal units compared to expectations for a decline of 113 billion, and showing from a drop of 216 billion in the previous week. The US crude oil fell below $44 a barrel for the first time since April 2009 on Thursday. The WTI had $1 range, now at around $44.50 per barrel. The yellow metal declined by $33. It went down to $12.51, trading at $12.60 as we speak. The silver declined by $1.20 to 16.7, now at 16.88. Natural gas went down by 20 cents, trading at $2.64 as we speak. Thank you very much for your time and attention. I wish you a successful trading day. Cheers. Bye-bye.